Yo guys, what's going on? It is Saturday, September 17th, 8:51, pretty much 9 o'clock. And I feel like doing a little bit of a quick, or I feel like doing a quick market update because most of my market updates are really long, and hopefully I can make shorter videos more often, just going over a couple things. So that's what I'm gonna plan on doing right now. And also, I did mention that I want to go over some educational content or have educational content in my market update videos for the time being. And last time I went over market structure. So if you remember, there is the market structure where we get a high, a low, and a higher high, and that is considered a break in the market structure, also known as a market structure break or an MSB, and that is a bullish MSB. And when we get a bullish MSB, we expect the price to either come down to the MSB itself, aka the resistance turned into support, or come down to an area, maybe the 61.8 golden ratio, or perhaps the bottom, the previous low, before turning around and making another higher high and another bullish market structure break. And then the bearish market structure break is the same way. We make a low, we make a high, and we make a lower low, and we expect the price to come back up and either go to here before making another low, or go to the 61.8 retracement and before making another low, or go all the way back to the very bottom before making another low. So we'll just say something like this, and then this will be another bearish market structure break to the downside. And we want to look for these things in areas of interest, such as demand and supply zones and support and resistance areas. So that was the gist of what a market structure break is. And now I want to go over ranges, and basically I want to have a weekly range that I go over every single week whenever I do my market updates. And I'm going to use a time-based range, which is the weekly high and the weekly low. And then I'm going to alter that a little bit if I think that it's necessary based on the market structure. So with saying that, let's skip the total dominance, the total level, and the dominance levels, because really this is trying to be I'm trying to make this a shorter market update. The one thing that I do want to say about dominance levels I did mention before is that this usually is the area where things tend to go down, so it's a little scary when looking at that. So anyway, let's look at Bitcoin and plot out the range high and the range low on the weekly time frame, and then use that to determine like what we're going to do. So if we look at the range high versus the range low on just a market structure perspective, it would probably be something like this is the range high and this is the range low. So there you go. And that's it. On a weekly perspective, we have last week, we have this as the low and we have this as the high. So with saying that, let's go down into the daily, or actually I like to go down to the 12-hour. And so this right here, I'll do the daily so it makes more sense. This right here, this was the low of the week of September 5th. Yeah, September 5th through September 11th. So last week started on the 5th. So it started right here. This was where last week started, and then it closed on the 11th. So it started here and then it went down and then it pumped up and then it closed right here. So this is where it opened, went down, went up, and it closed right here. And within this area, this was the weekly low and this was the weekly high. Now we're on to a new week, and we're actually 7 days in. So today is the 17th. But it is 9 o'clock. So that means that this day right here, the day that we're on right now, just started. And at 8 o'clock p.m. Eastern Standard Time tomorrow, this day will end. And then the next day, aka Monday, September 19th, will start. And so once this candle ends, then we will have the open of this week be right here. and the close be wherever this candle ends up, right? So within this week, we would have the weekly high. And then if this candle does not close below this one, then we will have the weekly low, and this will be the weekly range from the weekly high to the weekly low. And then we could determine or base our analysis off of this week's weekly high and weekly low. And so once this candle closes, we'll have the range high, we'll have the range low for the week. And then we could go into the lower time frames to determine if that's really the best area to be at the low versus the high. Personally, I don't really think that this would be the best area to be considered to be a low. I think that this would be a better area to be a low because it's, obviously major support. And so I start out on the weekly time frame and I plot the week's high and the week's low, and then I go into either the 4 hour or the 1 hour and I look at the market structure itself and just use my eyes to determine, okay, is this a better low? Well, I think this is a better low compared to right here because of all of the previous price action. It just seems like a much better area. And so that's how I combine using the weekly time frame range with the lower time frame market structure to determine what my actual range will be. And then based off of this range, whatever happens during the following week, I could use this range to determine what I'm going to do. So for instance, this is the range. And if the price happens to come down here and then come back up and do something like this, then I will be very bullish because it went down below the range and then swung back up above into the range. And this would be a buy for me. And then I could target the mid range and the range high, or I could target an order block up here, or I could target the 61.8 if I take the Fibonacci from, say, the bottom to the top, and the 61.8 is right here. I could do that. There's a lot of different ways that I could determine where my take profit's going to be. But this video, or at least this section of this video, is specifically on ranges and how I get the ranges. So that is pretty much the range that I'm doing right now. So going back to last week, let me just do this again. Range high, range low. Let me right click, go to template, range. And the range is simply the 1, the 0.5, and the 0. And then I'll go down into the lower time frames, see if there is anything there that I could do. And yeah, I think I'll put it like this. And so for me, this right here, this is the range. Let me get rid of this. This is the range that I am looking at, and I'm going to determine, what I'm going to be doing based off of this range. Okay, so that was the lesson on how you can create ranges in or on the charts using the weekly range as your initial time frame based range, and then altering it based off of the market structure to determine where you think the low of the week, the middle of the week, and or the low of the range, the high of the range, and the mid range should be. And this is just one example. If you were to use the market structure, solely the market structure as the range, maybe the market structure range would be this low and this high, and this would be what you would use. You don't have to do it how I did it, but that's just how I plan on doing it. So there's this. You could also have this be the high and this be the low and this be the mid range, which makes some sense considering that there was a lot of resistance right here. So it's really up to you on whatever time frame you want to do this on, or however you want to create your range. But ranges are definitely something that a lot of traders use. And the last thing that I want to say about creating ranges is to never, ever forget about the high time frame, just literally the high time frame. So look at the high time frame market structure and never get lost in the trees and forget about the forest, or whatever that saying happens to be. Let me go look that up real quick. Okay, I meant to say don't miss the forest for the trees. And what I mean by that is that this right here is a very, very big demand zone, right? So if you were just using the weekly like the weekly highs and the weekly lows and stuff like that, maybe you'll plot this out right here if neither of these things happened, and you would say that this down here would be the bottom right there. Like this would be the major support. And technically like this would be the major support for this particular week. If you go down to the lower time frames, this was the support. And then maybe if it broke down beneath the support, you'd freak out and you'd sell. However, you're missing the forest for the trees in this scenario, because on the bigger macro picture scale, this whole area was major support. So you should be buying in this area, even though on the lower time frame, this was the major support, or this was the support. This support is much bigger than this one. So even though we broke the support on the lower time frames, we fell right into a huge support on the bigger time frames or on the higher time frames. And so this was obviously this was a buy. So that is something to always recognize and not forget. So with saying that, let's go over Bitcoin. Firstly, on the monthly time frame, it looks like we're sort of just consolidating in this area. So we had the move down, the move up, the move down, and now for right now, we're doing a consolidation, forming a base before either a move down or a move up. And it's like, oh, thank you very much, a move down or a move up. I wouldn't have known that myself, but that's all that I really see on the monthly chart. So let's go to the weekly chart, see if there's something there. Well, on the weekly chart, it looks like obviously we just smacked down, and this is actually really sad. Look at this. This is Bitcoin at 48, basically 50K. Bitcoin pretty much $50,000 all the way down, weeks and weeks and weeks and weeks on end, all the way down to $17,000. So that this really hurt. This was weeks and weeks and weeks of red, just nonstop red capitulation, just thanks to 3AC and Luna and all this other stuff that happened. This hurt so many people, and now we're sort of just moping around down here. And this right here is the range. The range is really between 17.5 and 25. That's it. So if we break, and honestly, I would say more so 19,000, because there was only one big wick down to 17.5. So I'd say if we lose 19K and we close beneath 19K, that's very, very, very bad. And so I would definitely expect 17,300 from there, just because this is the 78.6% retrace of the entire move, move up, right? So yeah, we're in the consolidation zone, but this right here, this area is more so the support of where we are, and then this area is the resistance. So let me just make this red, and then I will make the midline. I'll draw the midline like this, and I'll put this as orange. So where's this at? There you go. Boom, orange. So this is what I'm looking at. We're closer to the support. Maybe on the lower time frames, we got a wick down and some type of bullish price action. Let's check it out. So let's go down to the 12-hour and see what is going on there for Bitcoin. So for Bitcoin on the 12-hour chart, we did get a move down below the low, right below this low that was the support area, followed by a move up above it, which was bullish, and then we slammed all the way back down, and we had a swing failure pattern right here, which was really good. So this was very bullish. This is a bullish candle. It's a swing failure pattern happening within a breaker. So right here, we had a move up followed by a slam down underneath the support. So typically you would expect a move up to occur back up to here, and then a move back down for the continuation downward, because we had the move up, move down, move up, basically move down. And this would have been a continuation pattern. However, this didn't happen. Obviously, it really just broke through and went on a tear all the way up here, which means that this order block, this bearish order block, now became a breaker, and then the price slammed down right into it, had a little bit of a consolidation, and is now still within the breaker, the 12-hour breaker. And it has not closed beneath of it yet, but if it does, then that would probably mean that we're heading lower, and we're probably going to head down into the 1900 to 19,000 to 18,500 area. However, with saying that, we got the SFP below and we're in the breaker, so we're still in a place where longs are preferred. So this is the 12-hour. Maybe if we go down to the 4-hour, we could see some type of setup. And yeah, I mean, we got the high followed by the low, the high, the low, the high, the low, the high, lower highs, lower lows, just continually happening, lower highs, lower lows, a bullish candle, bullish hammer candle, followed by a break in the market structure up, so a bullish MSB, and then a retest or a small retracement followed by another move up. So technically speaking, at least on the 4-hour, we should get a retracement down into this area, followed by a move up, and hopefully, fingers crossed, something like this up to at least 2100. And then like if we're bullish, then maybe up to here, which is like 21,500, followed by 22,877 at the highs. And so if I were to have gotten in right here on this retracement, I would place my stop underneath this wick. However, because we already had this new move up now, my next entry would be right here, and I would expect the market structure to continue upwards, and I would expect it to not come below this area, like this low right here. Otherwise, if we make a lower low, then that breaks the market structure of making continuously higher lows, which is what I'm expecting. So in that case, I could put my stop right here, but I'll just put my stop a little bit underneath, like right here, just in case we get some type of wick. And with that, if this is true, then this is a 6.37% move up with a 4R trade. So that to me is really, really good. I will take that any day. And if you take the Fibonacci from the bottom to the top and then look for the entry, yeah, the 61.8 from this move is $19,816. And from the very bottom, it is 19,561. So actually, I think I'm going to lower my stop just a bit. So that does lower my risk to reward from a 4 to a 3.64, but still not bad. Okay, so we have the trade set up for Bitcoin. And the other thing that I want to go over is Ethereum. However, I want to preface Ethereum with this. Look at the Ethereum against Bitcoin chart. Ethereum against Bitcoin came into the big resistance and then slammed down. So it's probably going to continue going down, which means that even if Bitcoin and Ethereum do go up, Bitcoin will go up more than Ethereum will. So because Ethereum is so close to the resistance, and I expect Ethereum to, I mean, maybe this will happen with Ethereum and it'll pop back up and then outperform Bitcoin. But like ultimately, I am bearish on Ethereum against Bitcoin right now. And I think that Bitcoin will outperform Ethereum. So I would rather trade Bitcoin, or I would rather trade something else like Solana. So look at Solana against Bitcoin. Solana against Bitcoin, it's fallen drastically, and it came to 88%, and now it's sort of just, here. I guess you could say that this right here was a big support resistance area, and it's hovering around it, but this doesn't look too bad, and it sort of looks like Solana could potentially outperform Bitcoin. But what I do know is that against Ethereum, Solana is definitely more poised to outperform Ethereum, given the fact that it just had a fall below the big support area and then a rise back above it, followed by a retest and then a move up. So Solana is definitely something that I would want to play instead of Ethereum if I'm going to go long. And so this is a little trick you could do to potentially get more gains, because in this case, if Solana and Ethereum go up, well, so and this also goes up, then Solana outperformed Ethereum and you made more betting on Solana to go up. So considering that Solana is really close to the support area for against Ethereum, I would rather look at Solana and look for entries, look for entries on Solana than I would Ethereum. So I'll just take a quick look at this, and like, it's pretty obvious right here. It's pretty obvious that this is a major support area. So I would say literally just trying to get in at this support, within the support, stop somewhere underneath here, it is the way to go. I mean, this seems pretty obvious to me. So let me bring this up, and for this, I would probably target the previous high. I'd probably target right here, and hopefully, I don't know, but hopefully this could be something like this, and we get something like that. Not sure what's going to happen, but all I'm going to say is that you should look at the coins, like other coins against Ethereum. Like I was in BNB, right? But look at this. Look at BNB against Ethereum. It's in this big resistance zone. So now I would want to get out of BNB, and I would rather trade Ethereum than BNB. However, Solana looks like it's doing better than Ethereum. So I could switch. I could get out of my BNB long, and I could go into a Solana long, and maybe even an Atom long. If it actually, I don't know. Atom is already up significantly, and yeah, it's getting to a bearish order block. I don't know if I would go into Atom now, but what I'm saying is that look at the different cryptocurrencies that you're looking at. Choose 5 or 10 of them, or maybe even just 3 to 5. Look at them and look at them against both Bitcoin and Ethereum to see what the better play is. Because BNB is up here, I'm gonna get out of BNB. And I'd rather take the money that I was in BNB and trade Bitcoin or Ethereum or something else. And in this case, I would rather use it to trade Bitcoin or Solana. And so that is a little trick that you could use to potentially get bigger gains. And I think with saying that, that might be all that I wanted to do for this market update. Just wanted to make it quick, give you a little lesson in there about ranges, how to make ranges, and just post something up for you. So with saying that, I think I'm gonna go, and I'll talk to y'all later. All right, peace out. Keep on stacking those sats and making those gains. Talk to you later. Bye.